Hang Seng is looking the worst this morning. It's down around 1.7%.
Disbursements for December month alone was about 4,650 crores, up about 3.3% month on month.
The chief technology officer and co-founder Gunjan Patidar, who's resigned, he was one of the first few employees of Zomato.
The rig for the company, Sagar Samrat, has started oil and gas production in the Arabian Sea. The first tick on the index is absolutely flat. The Nifty down about 20 odd points.
View for 22 was it's a tough year. I don't think it's changed much for 23.
In quarter three, the cost of energy, which was around $200, has come down to $170.
Kotak believes that LIC's dominance is unparalleled with 37% APE market share in FY22.
The Nifty for now is holding up with a gain of about 30 odd points.
The Adani Group will now pay an additional 49 rupees per share, 48.65 to be precise, to those who tendered the shares, NDTV shares to Adani under the open offer.
Now CBI has found out that between 2012 and 2016 also 10 high value loans were disbursed by ICICI Bank to Videocon Group, and now CBI has started investigating those 10 high value loans as well.
The Nifty is right now in the green, up around 5 odd points.
That was the day so far. Hello and welcome to Closing Bell, live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar, and with me are Nigel and Mangalam. Good afternoon, boys. Pretty okay so far, right? As we speak, markets are inching up. The Nifty is above that 18,200 mark on the benchmark indices. We've got a gain of close to about 0.2%. The morning dip was bought into, and then in the afternoon as well, you saw the decline around 12:15, and that's been bought into. Currently, one level to watch will be the day's high, which is 18,240, and then you will track last week's high. But the good news is, in December, the markets were almost giving you a signal that they're willing to break down. We were holding on to a range for a very long time, and then in December, in the middle of December, came that selling pressure. The Nifty went down to levels of 17,750 thereabout. Yes. That was on 26th of December. But since then, markets have put in a pretty remarkable recovery, 450 points up from that December 26th low of 17,740, 50 thereabout. That's a 2.5% up move. So once again, we are back in the trading range. Yes. And surprisingly, today, the banks and the IT are doing well. Usually, it's either or. But today, you've got the banking index, which is up close to about 0.5%. Again, PSU banks are doing pretty well. But even the IT index is batting for the bulls. The Nifty IT index is currently up close to about 0.8% as we speak. Asian markets, too, have recovered. Early in the morning, when the SGX Nifty was suggesting a downtick, the Asian markets were under pressure. But now most of them have managed to close up in the green. And the Dow futures, too, has turned around. And the Dow is currently up. The Dow futures is currently up 200 points. What are you tracking?
Well, that's right, Reema. But the problem is we can't get past that 18,250 odd mark. And today's day high is around 18,241 odd. I think a couple of those heavyweights in the Nifty pack, that's ITC and Reliance Industries, both of them have been sitting with a cut of close to around 0.8% to around 1%. And both those two are putting some pressure and preventing us from move higher. If they can even move into the green, maybe we get past that 18,250 in the next 60 minutes or so. So both those two stocks, I think, will be rather important. Besides that, today's high, is closer around the 18,250 as well. It appears there's a short straddle at play. What's that? At around 18,200. Why is that? Because the 18,200 call and the 18,200 put. You put that premium together, it's around 150 rupees or thereabouts. At the start of trade, it would have been in that vicinity of around 160, 170 rupees as well. So from 18,200, you add that, 150 points higher, 150 points lower. In the near term, we could be in a bit of that range that we are seeing. 18,050 on the downside to around 18,350 odd. Put the premium together, a bit of a option strikes strategy is playing out. That's a short straddle at the 18,200 odd mark. So keep an eye out. I think we'll need a bigger push to get past that 18,350. And in the next couple of days, the global markets as well, all of them will be open. So volumes will be back to full blow. So let's see how that plays out. But Mangalam, it's, the expiry, the Tuesday expiry as well that plays out. That's a financial Nifty. So we could see a bit of a move out there as well.
We could, Nigel. In fact, you guys were speaking about the Nifty. I'll just talk about the here and now and what could happen over the next hour or so on the Nifty Financial. The Nifty Financial options expiry, the weekly options expiry takes place today, and as we speak, the index is at 19,200. And that's a crucial level to watch out for, because the 19,200 strike has the maximum open interest out there, the 19,200 call on the Nifty Financial Services, for a premium of 35 odd rupees. So two things could happen. One, we could see some weakness here, a failure to cross that 19,235 sort of mark, or were there to be a cross and sustained move above that 19,235, we could see a big pop on the upside towards the end, as these call writers would run for cover. So that is something we'll be watching out for if there is a 3 p.m. move on either the downside because of the call writing that we've seen, or the upside if there is some short covering. So that becomes important to watch out for. As far as the index is concerned, majority of that index is comprised of banks and financial service stocks. The highest weight on that, of course, is HDFC Bank and HDFC Limited. So HDFC Twins is something that will give us a peek into what's likely to happen at 3. ICICI Bank is the other one that I'll be watching out for as well, which has been an underperformer in today's trading session. However, the other couple of stocks that I'll be watching out for will be Bajaj Twins. Both Bajaj Finance and Bajaj Finserv have a serious weight on the Nifty Financial Services Index as well, after the HDFC Twins and ICICI Bank. So, and for HDFC Twins and Bajaj Twins, we do have the pre-quarter updates that the street will be positioning for as well. So to that extent, these stocks will be even more important as we head into the expiry session. And talking about pre-quarter update stocks, just keep an eye out on Titan, the way that's moving. Titan's now moved to the high point of trade. Of course, some positions being built ahead of the pre-quarter update, which is likely sometime in this week itself. And it is the third quarter, which of course is festively, it is seasonally strong with festive season and the wedding season coming by as well. So that explains the up move that we're seeing in Titan in an otherwise skittish FMCG arena.
Okay, all right. Well, let's run our viewers through what we have lined up on the show. Life insurance stocks, well, they are surging in trade. What has led to this big up move? Well, details lined up on the show. We'll also be joined by Hemang Jani of Motilal Oswal for a chat on several stocks with a fundamental view. Mitesh Thakur as well will be joining, and he'll be helping us out with technical picks as well as technical strategies. And we'll track the market technicals in further detail. Jay Bala of Cash the Chaos joins in. We'll talk about the global markets, crude, the dollar index, as well as his view on Indian equities as well. And later on the show, joined by Shubhani Sirkar Kurian of Kotak Mahindra AMC. She'll be our Alpha Manager of the day.
All right, so how should you position yourself for the last hour of trade? We have Mitesh joining in with closing strategies. Mitesh, what do you make of the day so far, and are there any closing trades that you would have?
So I think, the index has slightly gained in strength. We were talking about the fact that 18,250 will be the upper end of the range. And in the last 2-3 sessions, we have seen intraday incursions around that, but not a breakout beyond that. But given the fact that every time we are hitting that level, the selling is not very strong, suggests that the pullback could possibly this time be preparing for getting past 18,250, 260. And once we get an hourly closing above that, I think then you might see the rally extend, possibly to about levels of 18,350, 400 zones. So it's still not signaling starting of an uptrend, but the pullback could definitely extend. With that, we are trading with long bias, though index trade will come in only once we have a breakout. The stocks which I have, Titan, I think we were just discussing the stock. Very good price and volume breakout happening over there. That's a buy with a stop at 25.75. And here I would recommend a target of around 26.60 to about 26.75 on the upside. The other stock which I like is Astral. Again, a mid-cap stock, but it's in the F&O part and it's giving a good breakout. So that's a buy with a stop below 1980 for targets of 2070.
Okay, look at the way Astral is spiked up 2.5% now. Another pocket which is showing strength today are the life insurance companies. Why is it buzzing? What's happening there? Surbi joins in with the details. Surbi.
Hi, thanks for that. So it's just not today. Life insurance has been buzzing in trade for quite a while now. They have seen massive correction recently. All other players except for SBI Life have seen correction of anywhere between 10 to 35% of their 52-week highs, which is making the sector even more attractive. Apart from this, few other things that are working in favor are many analysts believe that the industry is set to grow at a 15% CAGR in the next decade. Second, there is a continuous attempt by insurance regulator to increase the insurance penetration in the country. Just to give some perspective here, in India, insurance penetration is just at 3% versus 19% in other Asian countries. Along with that, the IRDAI is also simplifying regulations and making market capital requirements for the industry more dynamic, which increases the ease of doing business. Coming to some operational metrics, if you see the VNB margins for the next 3 years, all the players are expected to grow anywhere between 200 to 300 basis points. They will be largely moving from 27% to 30% when it comes to VNB margins, where ICICI Pru is pegged to be the highest at 30%. Moving on to valuations, on FY25 price by embedded value basis, the companies are trading anywhere between 0.7 to 2.3 times, which is significantly lower than their current valuations. And the next trigger for the sector is going to be the December premium numbers, which is expected to be in the next few days.
Okay, all right. Thanks a lot for that, Surbhi. Well, the whole sector is passing today. LIC as well as gaining. This has Kotak Institutional Equity as well. They've initiated a buy rating on the stock. Nimesh joins us to fill us in with the rationale behind that report. Nimesh?
Thanks, Nigel. So, Kotak believes that LIC is a value behemoth. That's the headline for their initiating coverage with a buy rating and a target price of 1,000 rupees, which potentially means a 40% upside from current levels. Now, Kotak believes that LIC's dominance is unparalleled with a 37% APE market share in FY22. In fact, LIC's high productivity compared to the peers remains dead rock for LIC's market dominance as well as the cost leadership. So that's where there is a bit of outperformance coming in for LIC. Now, Kotak believes that gradually there is going to be a shift, there is going to be a product mix shift which will boost the VNB growth despite moderate APE. In fact, the accounting bifurcation has led to a large increase in the embedded value and earnings for LIC, and even though the return on embedded value was depressed. Now, at current valuations, Kotak believes that the street is not, largely ignoring its large strength in terms of network, in terms of, agents, and it's attractively valued. So, on back of that, initiating report with a buy rating and a 1,000 rupees target price on LIC from Kotak Institutional Equities.
Thank you very much for that. Nigel, year end, we always talk about travel, hospitality, that demand is kicking in.
Yes.
But New Year also marks a time when you start focusing on your health, you take stock of your finances, you make decisions. Financial goals is a big part of that. And I guess we should start tracking whether there is an impact, at the beginning of the year, whether people do take, their insurance quite seriously and they look to top up or, get in a new one. So perhaps there could be that impact as well. Hemang Jani, retail equity strategist at Motilal Oswal Financial Services, is now with us on the show now. Hemang, afternoon. Thoughts on life insurance? What's driving this buoyancy that we're seeing?
Good afternoon, Rima. I think, given that insurance has been a sector which has underperformed in the last 1 year, and we're seeing a little positive data points in terms of EPE and the overall penetration. So I think it's more of a catch-up which is at play, and within the sector, we have a liking for SBI Life, which has shown the best annual premium growth with some amount of valuation comfort. And LIC, again, we have a buy rating over there, and we think that given the valuation comfort and the PSU flavor, there is some sort of a buying interest there also. So these are the two names where we have a buy reco within the insurance space.
Okay, all right. Hi, Hemang. I wanted to ask you about a couple of other names. A few stocks are doing well actually from the real estate pack, and our research team has just said that India Bulls Real Estate and Oberoi Realty, both of them, well, they are on a 7-session winning streak, irrespective of what the volatility is going on in the markets. But these two stocks have done quite well. Your view on the real estate pack, as well as any view particularly on both these two names?
So, Nigel, we have been having a positive view on the real estate pack and the, data points across the entire last 1 year in terms of registrations and the disbursement, if you see, is showing a very good traction. And despite the interest rate hike, I think the momentum has by and large continued. So overall, we have a positive view. And we've been liking some of the Bombay-based, companies, Macrotech and Oberoi Realty also. where the traction has been good. The only concern for Oberoi was that large part of their growth was coming from one particular project that they had, but our subsequent interactions have revealed that it's not the case. It's going to be a broad base. So we continue to like these two names when it comes to the real estate pack.
Right, and among the list of stocks which have been gaining for 7 days in a row, RBL Bank is one of them. And as we speak, the reason why I ask you this is because it's been an up move that we've seen on RBL Bank through the day, and it's just accelerated right now. It's moved swiftly in the last half hour or so. Your thoughts on RBL Bank in particular, and a lot of these banks which have reported their third quarter updates? What do you make of them? What do you like in that?
So overall, since we are into the preview period and the business updates are flowing through, definitely there is going to be some action that one can expect. And what we liked from some of these updates was that Mahindra Finance, the disbursement growth was okayish, nothing really great to talk about. And talking about the banks, Bangalam, what we like at this point is names like a Federal Bank and IDFC, First Bank. We do not, consider RBL Bank as something where we really want to go because of the, certain concerns relating to asset quality, etc. So we would rather go with some of these smaller banks like Federal Bank, that I have talked about.
Okay, by the way, it's 18,245 on the Nifty, which means we're back to the all-time high levels. The morning high was 18,241. We've taken out that level, and the markets are rising despite heavyweights like Reliance Industries. Reliance is under pressure on the back of that windfall tax increase. So that's exerting pressure on Reliance Industries. On ITC, there is a downgrade from UBS where they're saying that typically in a pre-election year or around the general elections, there is an increase in taxation. At least that's what historical data seems to suggest. So ITC is also under pressure, and ONGC is down close to about 0.8%. So despite a couple of these stocks losing ground, markets are inching up. It's almost at 18,250. And what's contributing on the way up? It's Titan Nestle. Mangalam was talking about Titan, and the street is awaiting the pre-quarter updates. But Titan, Nestle, L&T2 is another stock that surged. HDFC Limited, that heavyweight, is at the high point of the day as well. Hemang, what about PFC and REC? Both these two stocks are higher in trade. Should we expect some pre-budgets? Should we expect some SOPs in the budget? What's driving the enthusiasm here?
Yeah, so Rima, I think typically ahead of the budget, you do see some, hope and expectations around some reforms, and also some of these companies, they are, good dividend yield plays. So I think, maybe because of these expectations, there is some sort of a momentum which is there, but we are not actually, getting into that. For retail investors who are looking for a quick trade, maybe they are good opportunities, but we would rather, focus on some of the names under our coverage, which I have talked about, in terms of IDFC First, Federal Bank, etc.
All right, Hemang, just hang in there. Just hold your thoughts. We'll take a short break, come back, and we'll continue our conversation. Actually, we'll also have a conversation with Jay Bala of Cash the Chaos on the other side of this short break. Stay tuned.
Welcome back. Well, the markets are at the high point of the day, so pretty good news. 18,250 is what we're looking at. IndusInd Bank has moved higher. Nestle has pulled back from the day's low as well. So good going out. Then L&T, that was down close to under 1%, I recall. That's a larger weight on the index. When that recovers, it obviously helps the Nifty as well. So we're up close to 50 points out and holding at these levels. Remember, earlier today, we rejected this level. So it'll be important to see whether or not we can get past on a closing basis this 18,250 and then make a bit of a dash towards 18,350. But the sector that's been in focus is the banking stocks. They've been buzzing all day on the back of quarter 3 updates. Abhishek has been on top of that. He's joining in to give us a quick refresher and fill us in with details on those banks that reported. Abhishek?
Well, Nigel, to begin with, South Indian Bank, they saw the deposit momentum be weak. However, loan growth momentum was pretty strong, which means that their net interest margin can improve in a rising interest rate scenario. So deposits are up 2.7% YOY and about 2.5% sequentially. The CASA ratio has declined a bit to about 33.8% when compared to 34.5% in the previous quarter. However, the CD ratio has improved to 77.35% when compared to 76.8% in the previous quarter. This is on the back of the fact that loan growth is pretty strong at 18.5% YOY and about 3.2% sequentially. For CSB Bank, the gold loan portfolio continues to grow strong, which means that they are taking away market share from NBFCs. So deposit momentum was pretty healthy, 18.9% YOY growth and 8% quarter-on-quarter growth. The CASA ratio has declined because CASA in absolute value was almost flat on a sequential basis, and other deposits, that is the retail term deposit or the bulk deposits, have grown faster. So advances growth was robust at 25.7% YOY and about 5.6% quarter-on-quarter. In this, the gold portfolio grew by almost 51% YOY and about 9.3% sequentially. So the gold loan share in the overall loan mix has increased to more than 47% when compared to 45.5% in the previous quarter. X of gold loans, the loan growth is at 9.5% YOY and about 2.5% on a sequential basis. Talking about Bank of Maharashtra now, for last few quarters or after the first COVID wave, they have been growing robustly and much ahead of peers, especially in the PSU banking space. So deposit momentum was at 11.7% growth YOY and about 6.4% sequentially. The loan growth continues to impress, up about 21.8% YOY and 6% quarter-on-quarter. They have seen a sharp decline in CASA ratio, which has declined to 52.5% when compared to 56.3% in the previous quarter. The CD ratio or the credit deposit ratio remained healthy at 75.4% when compared to 75.7% in the previous quarter. Back to you.
Thank you very much for that. Hemang, thoughts on the quarterly updates that have come through from some of these mid-cap banks? While the lending growth continues to remain very strong, the deposit growth has not kept pace, and you always need deposits to fund credit growth in the future. So will that cap the credit growth we should expect, say, 6 months, 12 months down the line? Could that act as a bit of a headwind?
Yeah, so Rima, if you see for some of the PSU banks, the deposit rates have actually increased quite steeply, and this is much higher than what the consensus was expecting. So there is going to be a short-term impact on the margins, but overall we think that as long as the credit growth cycle is strong and looking at the numbers and the way things are panning out, that growth is likely to remain strong. So people are, looking at a very strong growth in the overall margins for both PSU and private sector banks. So we continue to feel that, two names are actually prominent, Axis Bank and IndusInd. These are the two names where, we think that from a preview and quarterly perspectives, we should be positively positioned.
Okay, all right. The stock that's really taking your breath away right now is Titan. As Mangalam said, the street is anticipating a quarterly update. Unsure how that's going to be. The verdict is normally split out there. But Hemang, what's your view on this one? It's the biggest gain in the last 30 minutes or so. Currently clocking a gain of close to around 2%. Never been cheap. So what would you do at around 2,600 rupees?
So Nigel, a very positive outlook on Titan. I think a part of the core portfolio, and I think because of the revival in the discretionary consumption and the wedding season, both the quarterly preview which will be out is likely to be very good. And I think there is a long way to grow. I mean, in terms of market share, because still their market share is hardly about 13-14% with such a strong franchise. So continue to have a very positive view on Titan.
All right, 13-14% perhaps. Maybe if you look at the overall, just the organized part of the market, if you just take a look at the unorganized market, it's somewhere in the mid-single digits, where the management has earlier been guiding Titan's, target market share to be somewhere around 10%, which would provide a long runway for growth out there. Though behind Titan, I'll just pull up, something like Kalyan Jewellers as well, because usually along with Titan, Kalyan Jewellers comes out with their update too. And Kalyan Jewellers over the last 6 months or so has outperformed Titan, and Kalyan Jewellers is actually flat right now. So let's see where that one goes to. With that, we thank you, Hemang, for joining in and giving us your views on a whole host of stocks as well as sectors. Let's welcome Jay Bala of CashTheChaos.com. Jay, there has been a bit of a pullback, and as we speak, it's around that 18,250 for the Nifty. Nifty banks holding well above that 43,400 mark. Your thoughts on where we go from here?
Yeah, thank you, Mangalam. The trend is still negative for the Nifty. As long as it's trading below 18,345 is bearish, and even if it were to get above that, the important pivot for the market is about 18,696. As long as the market remains below 18,696, the trend remains down. But the pattern for December on a monthly basis is quite negative, and that pattern where the markets clocked fresh 52-week highs or fresh record highs, and then closed lower than where the markets opened in December, that has occurred from 1997 about 9 times, and each of those occurrences, the markets have seen follow through, except for once in October 2005. And each of those decline has been somewhere about 14.5% to 64% from the high. So whether the market is going to repeat October 2005 where this pattern fails, or the 8 other times where this pattern has been successful, is what we're going to be watching. But the probability of markets going down is slightly higher, considerably higher than the markets going up.
All right. Hi, Jay. Wishing you a good new year ahead. You're throwing some caution to the wind right now. So how low can we go in case those levels break? I think you've put out a few support levels, 17,800, 17,500 odd. What if that breaks? Where do we go?
Yeah, when we spoke on 23rd of December, Nigel, I said the markets, are continuing the bull market correction from October 2021. And if this pattern were to play as per my expectation, I think we are possibly going towards the June low of 15,100 or slightly below that. But the extreme short-term supports, like you have pointed out, are at about 18,080. And below that is 17,800 and 17,500. So let's watch for this band right now at 18. As long as markets remain 18,345, I would treat this as a corrective bounce.
Okay, we're in the midst of a corrective bounce. Still the markets breach 18,345. Jai, afternoon. You've got some individual stock picks: Persistent, HDFC Life, ICICI Lombard. Can you tell us what is it that you're observing in each of these individual charts?
Yeah, before that, I will say, the market's volumes have been thin. So, unless you've got to be, compulsively in the market, you can just pass these trades and wait for the market's volumes to pick up. Of the 3 that I've got, Persistent remains most promising. I had a call on this as early as October about 3,400, and it came to 4,400 and started correcting. And I mentioned 2-3 weeks ago that we should be booking partial profits in the IT names. And right now, as long as Persistent stays about 3,700, it's looking quite bullish, and it has probability of going to record highs. And the other 2 are HDFC Life and ICICI General Insurance. But these are extreme short-term. These 2 are extreme short-term picks. As long as HDFC Life stays above 559, it's positive, and it's for swing traders, not for positional traders. So unless you have a time frame less than a week, you don't want to touch these 2. Likewise, ICICI General Insurance, as long as it stays above 1,200, it has got potential to scale about 1,350 to 1,375.
Let's take the discussion a little macro, Jay. Over the last few days, we've seen oil spike a little bit. Brent is now at 86 versus around 83, 84 that it was sometime last week. Where do you think that's headed?
The USD INR cross, Madhav?
The USD, no, I'm talking about Brent crude.
Sorry, say that again?
Crude.
Oh, crude, okay. Yeah. And I've been calling for a counter-trend bounce towards 87 and 90, and we've touched 87 today. Once this bounce is complete, we are likely to see a very sharp decline, and that is most likely to come along with a sell-off in the equity markets. But we need to treat each trend on its own merit. But right now, the counter-trend bounce for the Brent variety is nearing its completion. But watch out for it. Try to book some profits and let the markets turn down. Then we can get aggressively short on it.
Okay, all right. I think we've gone to a high of around 18,250, and again we have been met with resistance. A couple of stocks that have come off the high. You have Tata Steel that's moved a little bit lower in the last few minutes. The Bank Nifty itself has come off a little bit from the top. So pull up the intraday chart out there. That's come off a little bit. And, the Nifty Bank, pull up the Nifty Bank, that was doing quite well, but that's lost a quick 100 points out. Just take a look at that. That's the graph that we're looking at. So just keep an eye out. 18,250, it seems the bears are coming in there and protecting that level. Jay, before we let you go, final query, you briefly mentioned something on the dollar. What about the dollar index? We stopped talking about that. The fear was it went all the way to around 115. Then it's seen a good correction of close to around 10% from an equity perspective, particularly in emerging market. What's your take? Is it done? Have we seen peak dollar? Or do you believe we can yet go back to those 110, 115 odd levels?
In my opinion, I don't think we have seen a peak dollar, Nigel. But in the short term, as there is strength in USD JPY cross, or rather the JPY is stronger against the USD, and that's keeping the dollar pinned down. Once we see the dollar index cross about 105.82, I think we are looking at resumption of the dollar's uptrend. So the medium-term objective remains beyond 115, 116. But first, we don't want to get too ahead of the market. Let the market tell us that the short-term corrective has played out, and so we are waiting for 105.82 to get crossed.
All right, Jay, thank you so much for joining in and giving us all those trades. Wish you a happy 2023. Though the first weekly options expiry of 2023 on the Nifty Financial Services seems to be on the downside because we were seeing a lot of call activity take place at the 19,200 mark. And as we speak, the 3 p.m. move on the Nifty Financial Services has come on the way down. The index is close to 19,150 now. That's a good 50 points taken off in just the last few minutes. And that's perhaps on account of the call writing that took place at 19,200. So this is something that we'll be watching out for. A couple of these stocks which are coming off highs from the Nifty Financial Services itself. HDFC Limited is the one which is mildly off highs. HDFC Bank too, though both of them in the green, just a little off highs. We take a short break, come back and get you more on the other side. As always, we'll get you what dealing rooms are saying as well in our special D-Street chatter. Welcome back. You're watching us here on Closing Bell, CNBC-TV18, live from the Motilal Oswal newsroom. We're meandering around for the markets from, off the day's highs, off the day's lows, still sitting with about a 30-point uptick on the Nifty. The Nifty Bank up 200 points. Let's get to our favorite segment, D-Street Chatter with Nimesh. Nimesh, it's been a range-bound trading session with the market not bashing into the walls too much.
It's a lackluster day of trade. So honestly, that's the feedback coming in. So there is no clear direction and there is no participation as well. That's overall feedback. The flows are muted, but slightly on a better buyer side. That's the overall feedback, that there is some bit of buying coming in. I guess the buying is largely in the financial. So that's one space which stands out. Again, in today's trade, a lot of the financial stocks are buzzing in trade. So that's one space where there's a bit of activity as well. I guess what we're seeing in is also a bit of a sector churn. So insurance space is doing good today, but it's largely an extension of the financial space. We saw a lot of PSU banks doing good, a lot of bank stocks doing good, and now there is a bit of churn and an extension into the financial names, which is into the insurance stocks. So that's where I believe there is a bit of value buying happening in the insurance stocks today, but nothing much in terms of news, so to speak. Of course, we spoke about the LIC, initiating coverage from Kotak, but net lackluster day trade. There is no clear direction, and I guess the momentum from the flows is yet to pick up from the institutional investors.
Makes sense. And yesterday as well, you said that it wasn't as much selling, but it was just lack of, it wasn't as much buying, but lack of selling that took the market higher. And we did see that in the data. Individual stocks, what do you have on your list today?
So in terms of individual names, Mangalam, the first stock on the list today is Precision Wire. That stock is buzzing in trade up 10% last when I checked on goodish bit of volumes. I believe there is a board meet on 6th of January for fundraising via preferential issue, and most likely a leading family office is likely to invest money in that company. Hence, that stock is buzzing in trade today. So that's the first one. The second stock is Bandhan Bank. Largely, the financials are doing good, and Bandhan off late is seeing a bit of delivery-based buying, and that's been the case in today's trade as well. So there is buying support in Bandhan Bank. from larger institutions. So that's the second one. And the last one is HDFC Life. We spoke about the insurance stocks doing good and the entire space is buzzing. Largely on HDFC Life, there is some commitment coming in from larger FIs. It looks like one of the leading FIs is an active buyer now, and hence that stock is the biggest gainer in trade today.
Okay, all right. Thanks a lot for that, Nimesh. Well, the markets are holding with around a 30-point or so gain, but broader markets, well, they as well have come off a little bit. If you pull up the crisscross lines, at close to around 2,000, 2,100 stocks are advancing. That number has come down to around 1,600 odd. So the crisscross lines have got a little bit closer to each other as the trading session did progress. Mitesh is back with us. Mitesh, what are your buy or sell calls at around 3:10 p.m.?
Nigel, BTST on HDFC Life, I think there's a strong spurt in volumes as well as the price action is very positive. So 588 be the stop loss and 605 can be the target for tomorrow. And Crompton is something, which I highlighted earlier as well. I think that's a BTST. That's a stock which is reversing nicely from oversold levels. So BTST here with a very tight stop at 344 for targets of 352.
Okay, all right, Mitesh, thanks for that. Well, Shibani Sirkar Kudian, Senior Executive Vice President and Head Equity Research at Kotak Mahindra EMC, joins us on the show. Hi, Shibani. Happy New Year, and thanks so much for joining us. Looking forward to chatting up with you all through 2023 odd. Well, in terms of the equity markets, how are you feeling? All of us were celebrating 2022 amidst all the volatility, all the headwinds. India stood out. How are you feeling with regard to 2023 odd? A little bit cautious, or are you still constructive?
Hi, good afternoon and a very happy new year to you too. So at this point in time, when you look at equity markets, clearly from a global perspective, there are multiple macro factors which continue to remain at play. And India's growth has been stable and a relative outlier, which has reflected in the way our markets have performed over the last year. So coming to this year, we believe that this is going to be a year where movement of the market is largely going to be stock specific in nature, and earnings growth is going to be the key driver, and therefore there is likely to be fair amount of dispersion between sectors as well as stocks. So when you look at a headline level, if you've seen corporate earnings estimates have seen some amount of downtick recently in the first half of the year. But when we look at FY24, we still expect that mid-teen earnings is possible. Valuations is what is somewhat of a concern, both in terms of absolute valuation as well as relative valuations, which is why we believe that in the near term, we will have to contend with some degree of volatility in the market. So the way we are looking at sectors, we are trying to build portfolios based on companies where there is growth and earnings visibility, trading at reasonable valuations. Our preference has been for companies and sectors which have more domestic focus and domestic bias, vis-a-vis global cyclical sectors. So that's how we are really positioned across our portfolios.
Shibani, afternoon, and thanks for joining in, and Happy New Year. Is the domestic theme getting a bit crowded now? Everyone we speak to seems to be inclined towards purchasing the domestic themes and avoiding the global cyclicals. Is it a crowded trade now?
So to that extent, if you look at the way the growth recovery has panned out and why India has been standing out in the global markets has been the fact that growth has been relatively stable where India has been concerned. But within the domestic recovery theme, there are a couple of factors that we now need to look at. One is when you look at the recovery post-COVID, a lot of the recovery was led by the urban segments, which resulted in the growth bounce back. And rural was something that was dragging the overall growth dynamics. At the margin, we do expect that rural growth and demand should largely bottom out. And incrementally, there are signs that there is some degree of improvement on the rural side. And therefore, there are some sectors which are more rural biased, which could be in focus going forward as well. Now, within the domestic theme, there are 2-3 sectors where we continue to see a runway for growth as well as valuation re-rating. One, of course, is financials. We've discussed this in the past where, while the sector has done well, given the fact that, today banks are still trading at valuations which are largely in line with their long-term averages where ROEs are improvement, there seems to be runway for growth there. And the second segment where we continue to remain positive, which is more domestic biased, is the entire industrials, manufacturing and infrastructure theme. So yes, so while we have been positive on the domestic story, incrementally we do believe that one, rural demand should start to improve. Secondly, financials and industrials are also segments where we continue to remain positive.
Right. So, Shivani, while you are positive more on domestic facing sectors, would IT feature at any point in your list at some point because of purely because of the correction that we've seen in the stocks? Is it a value play here at some point?
Yeah, so we have been evaluating IT now pretty closely. Of course, the sector has seen a fairly sharp downtick and correction and has underperformed in the last 6 months. So therefore, from a valuation standpoint, especially where some of the large cap names are concerned, valuations are now reaching back to long-term average trends. Typically, with IT as a sector, one key factor that leads to multiple re-rating is the growth and the revenue growth trajectory revival. In the near term, while the overall trend seems to suggest that valuations may have bottomed out, we will still wait to see what is the commentary from management in terms of the deal flow momentum that they see for the next year. And that is something that we will possibly get a sense regarding in this particular quarter numbers. The second factor, when we look at IT is, of course, on the margins front. Margins, we believe, have bottomed out and incrementally margins should start to improve as some of the pressures regarding attrition, wage hike, etc., is now seemingly in the past. Overall, our view on the sector is that today, given the uncertainty around revenue growth, the large cap players appear to be better placed. And therefore, our portfolio positioning is such that we prefer large cap IT over mid cap at this point in time.
All right. Shivani, what's your view on consumer durables? Earlier today we spoke to the management of Blue Star, and they said they have not seen any kind of slowdown. But otherwise, various channel checks are suggesting that maybe December was a little bit soft. Your sense on this theme?
So of course, as we were discussing earlier, that when you look at the recovery on the consumption side, a lot of the recovery was led by the urban segments. However, within consumer durables, what we are seeing is in pockets, there is fair degree of competition. Also, while the festive season was very strong, possibly some of that, has started to wane off, and we will watch out clearly for trends in terms of urban demand holding up from here on. Therefore, incrementally, it's important to see that the overall growth on the urban consumption stories remains intact. So far, trends have been fairly stable. But at the margin, if you look at, especially in the last 2 weeks of December, some of the channel checks have suggested that there is some small slowdown that is visible. And therefore, that is a trend that we will have to watch out for. But as of now, it does appear that overall demand and consumption demand continues to hold up. And if you look at the overall consumer durable space, this is a segment that we have been positive on, given the fact that consumer discretionary spend has been leading the recovery. But in pockets therein, also competitive intensity has increased, which means that there is some degree of pressure on margins, despite the fact that you've seen commodity costs actually come off.
By the way, Bharti Airtel has now moved to the high point of the day. So that's showing you a gain of close to about 0.6%. When it comes to Bharti, one of the key triggers the street is going to watch is that whether they will extend that pan-India price hike. In the month of November, the company had taken two price hikes, but only in 2 circles. And they said we're testing waters. And recently, what we understand is that the internal thinking in the company's mind is that by February, we'll get an idea of the extent of churn. By churn is because of the higher prices, have they lost a lot of subscribers? If they haven't lost a lot of subscribers, that means the churn is lower.
Yeah.
Then by February, they'll get a clear picture, because sometimes you update or upgrade your plan in 1 month, you repay in 2 months, etc. Right? So by 3 months, you get a picture. So in February, the company will take a call on whether they should extend that price hike to the balance circles. So that's going to be a very important trigger, because once one company does it, usually the competition is going to follow. Shivani, any thoughts on the telecom industry? It doesn't have too many players to pick and choose from, but do you like it structurally or tactically at the moment?
Yes, as you rightly mentioned, it's a sector which has seen consolidation, so therefore not too many listed players left in the sector. But consolidation has also meant that the sector, in terms of its pricing behavior, has seen improvement in the past year, a year and a half. We do expect that slow and steady price hikes should start to come through for the sector, which will lead to improvement in terms of profitability. So telecom has been a space where we've been positive on, and we continue to hold that view. As you rightly were discussing, that if there are incremental signs that companies are willing to take price hikes, which should lead to improvement in profitability, that should be the next leg of re-rating for the sector. And so that's something that we will have to wait for.
But Shivani, finally, before we let you go, FMCG has fallen out of favor with everyone given the valuations that it has traded at and the kind of weakness that everyone was seeing in rural demand as well. And then there was inflation. Now, your belief is that rural demand will recover at some point. We've seen, a decent amount of correction in a lot of stocks as well. And the belief is that now the worst of raw material inflation is behind them as well. Will you look at any of the FMCG companies going forward?
Yes, so I would agree here that, incrementally, when you look at the way the sector has performed, and if you look at the revenue growth trajectory, a lot of the growth over the last year was led by pricing, and volume growth had been muted. And that was reflective of the fact that rural economy in terms of demand was lagging. Now, incrementally, as we start to see signs of some rural recovery coming through, or at least some bottoming out in terms of the demand trajectory, we should start seeing some improvement in terms of volume growth where FMCG is concerned. The second important factor is that, in terms of margins, incrementally raw material costs having come off, margins should also start to improve, and that should aid overall profitability in the sector. And finally, in some specific stocks, you are seeing that the stocks are now trading at valuations which are lower than their long-term average levels, and therefore offer some opportunity. So incrementally, we tend to be a little bit more positive on the FMCG space as well.
Thank you very much, Shabani, for joining in. Need to slip into a very short break. We'll come back with more market talk. Stay tuned. Welcome back. 18,238. We got the levels of 18,250. But from there, we're unable to climb, conquer it, and move higher. So we're just hovering around levels with a gain of close to about 0.2%. So I guess this 18,250, 260 continues to remain a resistance level for our markets to track. But listen into an interesting market opinion. Earlier today, we caught up with Sridhar Shivaram, Investment Director at Enam Holdings, to understand the market outlook for the year 2023 and the top sectors that he's betting on.
View for 22 was it's a tough year. I don't think it's changed much for 23. That macroeconomic, data still not looking very favorable for a global bull market. So this is going to be another challenging year. Like we saw in 22, we'll see a lot of ups and downs, at least for the first 6 months. That's our view, at least that's my view, that it's better to protect capital again in the first 6 months and take a call post that. Financials, our view remains that it's possibly on a sweet spot right now. Big bankers like Mr. Uday Kotak said it's a Cinderella moment, and I don't dispute that, because it's not just the loan growth. Actually, the bigger delta is the credit cost. When you speak to people in the banking sector, they tell you that it's not only the corporate sector which is not seeing the credit cost, even the retail, for whatever reason, strangely enough. In fact, our view is there's a K-shaped recovery. We should see retail NPAs coming through, because if the lower half is not, participating in the growth, then there should be NPAs there. We think credit cost is going to be significantly lower. As a result, the earnings growth for banks will be significantly higher. As a result, we will see upgrades in financials. I think we're starting to engage with a lot of these companies because a lot of the froth is out. We think growth will come back maybe in the second half. So we need to be ready with our analysis on which are the good companies and what is the right price to enter some of them. What is the business model? Do they have a path to profitability? If a lot of this fits in, I'm not against any of the new age companies. Some of them are really good companies. Question is, what is the price we are paying for it?
Right, it's looking good for a lot of these cash stocks which are buzzing around today. We have Precision Camshafts, which is up around 16.5%. Precision Wires, of course, is a stock which is buzzing. Nimesh just spoke about the possibility of a pref issue out there. Precision Camshafts is up 16.5%. V-Mart Retail is the other one, up 7%, despite the management saying that the festive season was slightly weaker than what they anticipated. And we're seeing a big up move in Mazgaon Dock as well. Defense was the theme of 2022. And the first few days of 2023 seems like that continues as Mazgaon Dock does well. Mitesh, from the broader markets, we also see a big move come by on NBCC now from the lows. Currently, it's at the high point. Do you have a view on any of these broader market names?
See, I haven't been tracking all of them, but some of the volume buzzers have been on the list, and the ones which are clearly enjoying strong momentum are stocks like Mazgaon Dock and Kochi Shipyard. So I think that's where you can possibly look for some kind of reversal after a few days of consolidation. Especially Mazgaon Dock, I think once it starts getting past levels of 851, I think the high today is 844. Yeah, 851 I think is the breakout level. I think then it could show momentum and possibly retest the earlier highs of 920. Similarly, Kochi Shipyard is also another one which is giving good traction. You'll have to give me some time to work out the levels exactly on that.
No problem, Mitesh. What we'll do is we'll actually leave you to read those charts in the time that we have and speak to you tomorrow as well. Thank you for joining in. Let's start wrapping the day's trade then so far. It's been a good session, so to say, where we've seen dips be bought into. The Nifty ends with about 0.25% high in terms of gains, but it's the Nifty Bank which actually led from the front today. The Nifty Bank ended about 0.6% higher. Among the top gainers on the Nifty today, we have the life insurance names which take the top honors. HDFC Life up almost 5%. SBI Life follows with a gain of almost 2.5%. We spoke about banks doing well, so Axis Bank was among the gainers there. Titan gained ahead of the pre-quarter update, so that stock ends at the high point, 26.15 on that counter. Most of the gains coming by in the last hour or so. TCS, a couple of these IT names actually also supported the index. So we had TCS, Tech Mahindra. From the pharmaceutical pack, Sun Pharma did fairly okay as well in today's trading session. On the losing side, we had Hindalco, which gave up some profits from the earlier parts of the week. So Hindalco ended closer to the lower end of today's trading session. Metals actually saw some profit taking. So JSW Steel along with Tata Steel also ended lower. The one big drag on the index, however, was Reliance, which ended about 0.75% lower. HUL was also weak, and we saw some weakness come by in Britannia too. The market breadth ended in favor of the advances mildly. Nigel?
Well, in the final hour of trade, actually, you saw a couple of big movers. Religare was a stock that ended high with a gain of close to 6.5%, and the entire move has come just in the final hour of trade. So a big move is what we're seeing out there. ICICI Prudential is the other one that did pretty well from the broader markets. So that was up and about. GIC as well was up close to around 6%. Remember, for Religare, they have that holding in Care Health. So maybe, in fact, the street is trying to extrapolate some value out there. So that could explain why Religare did move higher in trade. SCI, 2 days running, the stock is higher. It's up close to around 10% odd. The street's hoping that the businesses get split and maybe ultimately that privatization, long-awaited privatization, does take place. But Rima, that's about some of the big movers in trade today.
Absolutely. And M&M Financial, the stock ends down 3% on very large volumes post the update that came through. Mangalam spoke about the profit booking that we saw in metal names. So Nalco's sale in the broader market are losing ground. And on the gaining side, PSU Banks, the Nifty PSU Banking Index was up 0.7%, and South Indian Bank, Bank of Maharashtra, UCO Bank, these saw a lot of gains. By the end of it, the markets are closing with steady gains. So we're up 0.2% on the benchmark indices. But today, the global markets will reopen for trade, the United States markets. So soon, from tomorrow, volumes will also pick up in the global markets, and we will move in line with what's happening. Also tomorrow, you've got the FOMC minutes. The minutes of the previous FOMC will be out, so the street will be tracking that very closely. All in all, steady session. The dips were bought into, but the Nifty found it tough to conquer 18,250. It's a wrap on Closing Bell. Thank you for watching. Our Tuesday special, Commodity Champions, comes up next.